First of all, I would like to apologize for starting the session a little late. Raman somehow was stuck somewhere, and I was in a meeting, so it took some little extra time to join the session. So recently, there has been another interest rate hike which has happened. There was a 0.5% interest rate hike happened, whereas the industry we were expecting around the interest rate to happen around three quarters to 1%. So it came as a I would say a big reliever to a lot of people, wherein the interest rate hike by Bank of Canada was 0.5% instead of the expectation, which was 0.75, or even we were somewhere expecting around 1% also, which clearly shows a sign that we are getting better towards the inflation. The inflation numbers are getting better, and the Bank of Canada is getting closer to the point wherein the interest rate hike, I won't say it will stop, but it will going to a lower level. The next interest rate hike might be happening maybe 0.25 in the month of December or in the month of January. So I have Kamal with me. I will be taking his views on the recent interest rate hikes, and we'll be talking about how to handle this rising interest rate, because it is impacting all of us. It is impacting no matter what level you are at. It is impacting all of us. So let's take Kamal on live with us. So, Kamal, good afternoon.
Good afternoon. How are you?
I'm good, Kamal. How are you?
Fantastic.
Good to see you wearing a leather jacket.
Well,
Now, normally I see you normally wearing suits.
honestly, where and thought it was getting delayed, so I wasn't sure that the session was the thing.
Yeah, I know, because I was also in a meeting, so I was driving, so I just came into the office, and I said, you know what, whatever time we have, let's use that good use of time, and let's give some tips to our viewers.
Yeah. So on that part, yes, I would say you are the best person for the tips, because for the sales side, you're getting a lot of live updates. I'm more of a distance. I can just observe things, but you will have
Yeah, so again, Kamal, if I talk about the recent interest rate, because definitely we all were waiting for 26th of October, when the Bank of Canada was
more
bringing the
handy
new
information.
interest rate. And as I mentioned, the I would say feeling in the market was that we will be getting three quarters interest rate hike, because everybody was thinking that Bank of Canada is going to go the federal way, and the way the Fed has increased three quarters in US, this we will be following the suit, and we were expecting three quarters, or maybe even 1% also. But the interest rate came as I would say a big reliever to a lot of us, wherein it's a 0.5% interest rate. I'm not saying that it's not going to impact the mortgages, not going to increase the monthly payment, but uh, this is a clear sign that market is getting better. Bank of Canada, they are monitoring the situation and looking into things. They have decided to go only with the 0.5%. So it has given a sigh of relief to lot many people, and now we are getting close to the point wherein we see that the interest rate hikes will not be as drastic as it was anticipated. So in December, as far as I'm concerned, I'm thinking that it might not happen, or even if it happens, it's going to be around 0.25%, which is going to be a boost for the real estate market. So what do you think about that, Kamal? You know what? Do you see that thing happening in your side also?
Uh, you know what? Honestly, I think it is impacting, because, and I think it has made many people immune also. You know what I
Yes.
feel? Now
Yeah.
people are saying, it is going to happen, and it is an external factor which is out of control. Have to accept, So
Yes.
I feel, uh, of course, people are getting ready, but the way the things are moving, not encouraging, which is, the way real estate or anything which is concerned to real estate is getting rate hikes. But definitely, I think government has certain task on their vision. I think one of the measure they are taking through the rate is, to control the. But the little question which I wanted to definitely ask you is, what this should continue, or what you feel it is going to deteriorate or stop. We are almost touching 6. Probably by the end of year, we might be crossing 6% and percent. So you feel that it is going to be a temporary, or is it going to be a permanent?
So, Kamal, again, I have shared my views on this topic before also, and I carry the same views that definitely the interest rate have gone sharply high in last around 6 months. But somehow people, they had the more impact of this interest rate increase, because somehow we were used to having a too low interest rate during the pandemic, which was around 1.3 to 1.5%. Somehow we never realized that the rate which was offered to during the pandemic was because we were into once in a 100-year situation. We were handling a situation which was all over the world. We have never seen that kind of situation in last 100 years. So just to put more money into everybody's pocket, because people, they were sitting at their homes, a lot of people, they have lost their job during pandemic. They didn't had enough money to even to run their families. So at that time, those rates were brought to the level wherein people can have more money into their pocket, they can feed their families, they can get into get out of those situations, right? But definitely we cannot live into pandemic for all our life. One fine day, once the pandemic was over, everybody was coming out. So the impact of that side coming out, wherein the money, there was more flow to the money into the people's pocket, so they were spending habits were there. And that was fueled further by the world situation, wherein we are having the Russia Ukraine war. Because of that, there was gas prices went up. We had situation in China, because of that supply chain got impacted. So there was, even if you want to pay the money, you don't getting stuff. It's not about real estate, you talk about any stuff. Today you go out, you talk about buying furniture, you buy about anything, construction material. There is not enough materials available in the market. Because of that, the prices started to went up, which contributed towards the high inflation. Okay. And as soon as the inflation goes high, it I would say impacts everybody. It impacts your daily routine, it impacts your groceries. So even a common man get impacted with that inflation. So now to control that, only way the government could find out was increase the interest rate, so that they can stop the money supply to the people. Okay. Yes, it was bound to happen, but it happened too much and too late. That's what I feel. Again, I'm not an economist. I'm not someone who's advising Bank of Canada. But if the same thing could have happened in maybe a year before, in a little slower pace, the things might not have impacted that much to the common people. But what is supposed to happen, it has to happen. We have to find ways how to tackle it. That's what I can say. Going forward, I feel that we are getting close to the peak of the interest rate. That's what I feel. I know, a lot of people, they talk about, oh, I have not seen what happened in 1985 or what happened in 1990. I do respect it. Yes, I have not seen that period. Like, there is no way I could have seen that period when I came to this country in 2008. But there is I feel that there is drastic difference between the period where we were in 1990 and where we are today. At that time, we were not that much globally connected with all over the world. Countries, they were not impacted to what happened to one country to second country. In today's time, we are very much globally connected. uh, all over the world, the efforts are being made to make the situation better. So I feel we are little different than what we were in 20 years before, 25 years before. So we will be out of the situation way better than what we were doing at that time. As I was talking about that, as far as I see the interest rate, we are close to our peak. We might see another interest rate hike in the month of December or in the month of January. But that's what my personal feeling is, this that by in between month of March to June 2023, we will see interest rate to start coming down. We will see the inflation is controlled. And it all depends upon the world impact also, that what happens to the war happening in Russia and Ukraine, what happens to the supply chain all over the world. If those things get better, we will see a much better inflation numbers, and we will see interest rate going down. That's what my personal feeling is.
Okay.
So now, you know
Okay.
what,
Yeah.
today, Kamal, we are going to talk about. We all know the interest rate has gone up, but what is the impact of the interest rates on a common person, and how they can handle rising interest rate? Because the incomes have not gone up, but the expenses have gone up. The monthly mortgages have gone up, especially all those viewers whose mortgages are with smaller banks or with credit unions. They are not, they are increasing their monthly payments as soon as the interest rate hikes. So definitely is going to have an impact on our daily spendings. So let me ask you that, do you like to share some tips how to handle these hiring interest rates or hiring extra payments for your mortgages? Do you have some tips for that, Kamal?
I can share the tips which personally I have been following.
And
For the
recently
math.
you have bought a house also, so you can you can very well understand that.
So I mean, one of the measure I have taken is important or not to be avoided expenses, and some of the expenses which the category which can be avoided or can be kept for the later, like say 6 months or 8. So definitely there is one category which I am keeping is definitely can't make changes. So whatever is the monthly thing, I'm some of the uh, measures or some of the changes I wanted to do right now. I'm so that the monthly payment for the mortgage doesn't get disturbed. That's number one. Definitely uh, pulling down on certain expenses. As I said, this is my personal view. I mean, not to do anyone needs to follow. But cutting down of some of the personal expenses which are not very important in nature. I mean, even the shopping is one part of that, because it came into a very natural side spending without even thinking that those small things contribute to a big sum, like second month or third month. So I think these are the two personal measures which I, let's see, like how the things move on. Probably if I have to cut down more, probably I will. Mr. Sachin, right now.
Definitely, Kamal. You have touched a very important topic, because when we talk about the handling the higher interest rate or handling our expenses, see, when we have the good flow of money coming to us for whatever reason, whether we are working more, we have a good income, or there's a flow, there is a help coming from the government side, we get used to spending that money at our will, right? That's a human nature. Most of us, when we have got extra money lying within our bank accounts, we start spending, whether it is home renovations, or we are talking about, because I have seen last 2 years during pandemic, especially, the neighborhood I live in, I have seen most of the driveways getting, renovated, most of the driveways getting interlocked with the stones and everything. And I was thinking, suddenly from where this money is flowing to the people, because income has not gone up. But when we see money coming in, we have the tendency to do renovate our houses, we have tendency to go for extra shopping, we have tendency to go for traveling, go on vacations, go out for the food, right? Go to restaurants, right? So first thing definitely that we would recommend is this, that make a list of the extra expenses that you are having, expenses that, especially during the inflation, when you are going through this patch, you got to make the list of those expenses which you can live without having those expenses. Right now, when we are going through this time, it is very important to keep extra buffer in our bank account. Okay, that is the most important thing, that you should at least have 3 to 6 months of buffer lying into your bank account, so that even if you have less income coming, or you have got, your source of income has dried up, you can live comfortably for next 3 to 6 months. So that's the first tip that, I would like to give to all our viewers, is that make a list of all those expenses that you feel that it can be avoided. Okay, renovations which you want to do to your house, but you can live without those renovation to your house. Even if you do your hardwood after 6 months, it won't harm you. Even if you do your driveway after 8 months or 1 year, it won't harm you right now. But keeping that money into your bank account is very, very important. Okay, same thing goes with your even though this it's a very minuscule amount, that eating out, going to restaurants, right? Those are small numbers, but it will add up. Those small numbers will keep on adding up. And the third thing would be, control your shopping. It's very, very important, because we are getting into the festive season. We will be having Christmas in 2 months, and we are like, that's the season to shop. But this year, That's what my recommendation would be. Control your shopping habits this year. Okay. Second thing would be, when we have got extra payments coming, especially for the mortgage, I would say sometime, and I have been the culprit to this, when we have assets right now, we try to sell our assets, okay, and try to get cash out those assets right now. Again, that's an easy way to to get money to our bank account, but sometime it is not suggestible, because sometime that's not the market to liquidate your assets. Sometime we start selling our assets in the panic, okay, and people are there in the market who are there to make money into this kind of situations. So my recommendation would be that even if you have assets and you feel you have the urge to sell those who have assets on whatever price you're getting, so that you can have some extra cash with you, I would recommend that if you have the possibility to take a line of credit, even though you would feel that I'm paying little higher interest rate, sometime it is wise to pay an interest rate and secure your assets, because that interest rate might cost you maybe 5 grand, 10 grand, or even 20 grand in a year. But the asset that you're securing right now, or you are keeping it safe, that asset might increase by $100,000 or $200,000 in next 1 or 2 years. So again, this advice might not go for everyone, but if you have the situation, just assess your situations. Do not always look for a easy ways. Look for ways by which it might create some challenges, but at least you can keep your assets safe. So that's what another recommendation I'll give you as far as the money is concerned. So this is, we are talking about managing your expenses, Kamal. So would you like to share? I know we are expanding towards Australia as well as US. So would you like to share some views on that front?
So,
So
as
that is your favorite topic.
again, definitely, like one of the areas I definitely want to, see our trees and have a global presence. We are definitely going accordingly, and we for Australia, we have plans for US, and similarly, very soon we will be having Dallas, Texas. When we talk about US, we are having one of the event that is in Texas, where we are meeting a lot of people. And for Australia, yes, after 3 months, would the right time when we will be disclosing what all cities are starting our operations in Australia, and that not too far. I would say 3 months time, there will be a lot of action in major cities of Australia as well. Plus, not alone Australia and US. I would say we have some major, I would say major, I would say accomplishment up in south side of India. We are getting some real good partnerships happening. It is increasing to a great extent. So I mean, there are a lot of, like, there is a big list of, as we move towards the end of 2022, we have accomplished a couple of countries, and we definitely look to achieve that in next year as well. So Mr. Raman joining us, I think he is here with us. I lost your voice.
Good afternoon, Kamal, and welcome to your session, Saturday live session. I think you are mute, Raman. Yes, now I can hear you.
You can hear me now?
Yes.
Perfect. So guys, a very good afternoon to all of you. I am so sorry for being a little bit late, and I know Sachin and Kamal were taking some lead on today's session. I was having some technical difficulty. I don't know why it was not allowing my mic to get coordinated. So I really got a little bit late. But anyway, guys, thank you very much for joining for today's session. Sachin, so I think we are having some interesting discussion today, because this is very, very relevant to today's market. Rate of interest are increasing. People are skeptical what is going to happen. And lot many people, they don't know how to handle this challenge. So I'm pretty sure you gave some good tips onto that. And I have some of the points which I also want to discuss, but I would love to hear from your side, like, what tips you gave so that, we can carry forward the discussion from there. Sachin? Sachin, I think I'm losing your voice now.
Oh, I'm sorry, I was on mute. So me and Kamal, we were sharing some tips on today's time when the interest rates are going higher. Because of that, there are extra payments that have been getting made by everybody towards the mortgages. There are more monies required to take care of our daily expenses. Inflation is high. The grocery had, the daily expenses that we are doing, whether it was towards the groceries or any expense that we are doing has gone high. Because of that, the more money is required to take care of our daily needs. Okay, whether we talk about at an individual level, family level, or the company level, it is very common at every level. So that's what we were discussing. That, and a few of the tips that I shared was that in this time, the first thing is this: we need to control some expenses which are not required. I know when we have the extra flow of income, we are tend to make some extra expenses, whether it is towards the renovations of the house, whether towards extra shopping, extra food, going eating out. All those things are there, so which we need to control on those small things, because those small things add up. Especially when we talk about family level, those things are very, very important. And second thing is this, that this is sometime I have been too culprit to this, is that when we have situations like this, we try to find easy ways out to have our extra flow of money. When I say that, a common example is that sometimes we have assets which we try to liquidate just to get some extra money, whereas we have some extra options wherein we can use our line of credit, we can get some money on the by paying some interest, and we can save those assets. So one advice, again, this is very subjective to as the situation of individual person, but a general advice would be, if we can safeguard the assets, we should try to safeguard the assets. Okay, if we can arrange money through our line of credit, so that the extra burden that we have towards monthly, we can take care of that extra burden through those line of credits by paying some extra interest and safeguard the assets. If we can save some money by controlling our expenses, and we can use that money towards the extra burden that we are having, we should do that. So that's what my tips would be at a smaller level, but definitely you are here now, and you can share your thought process on that.
Yeah. So Sachin, this is a very critical situation, and this is a very practical situation, which a lot of our viewers, they might be going through, especially in the Canadian context, where the rate of interests are like, I think it's 4 or 5 times the Bank of Canada has already has approximately 3.75%. Am I right, Sachin? It's 3.75% is the prime lending rate, right? Hello. Anyway, so guys, Sachin, what is the prime lending rate today? 3.7.
So now it is 3.75 after the last 0.5% increase we got last week.
Okay, that's good. Sometimes I get really out of touch of these things, so I wanted to make sure that I'm not providing any wrong information. So Sachin, my first and foremost advice, especially to those people who had the variable rate mortgage, because somebody who had the fixed rate mortgage last year or last year, like 2021, they are laughing, right? They are fun. But people, especially who had like the variable rate mortgage, they have little concern onto that. So my request to them is, guys, the first and foremost thing, understand your financial obligation towards your bank, towards your mortgage lending company. So the first simple solution, talk to them. Very, very important, because try to understand, no bank or no lending institution has any interest to put your property on power of sale. They will come up with this solution many times. They will give you an idea. They will give you some kind of relaxation on your mortgage. And believe me, this is my experience. Most of the time, if you are nice to them, they are very good in giving you a reasonable solution. So that is the first thing which I would recommend. Now, the second thing which I would recommend is you have to sit with a professional. You have to sit with a financial advisor, you have to sit with your realtor, or you have to sit with your mortgage broker and explain them your situation, and then see how complicated and how challenging it is. If your mortgage, let's say, was around $2,500 6 months before, and now if it has gone as high as $3,500 after 6 months because of the rate of interest increase and whatnot, right? So check the equity in your house and see if you can use that equity to get some secured line of credit, because that is one of the cheapest loan, that is one of the cheapest money available to you. Of course, you can actually exercise one more right, which many times doesn't happen. You can definitely go look towards your friends and families, and can borrow some money if you are really struggling to overcome the challenge of that increased rate of interest and increased mortgage payment. Sachin, in most of the cases, many banks, they give you that option that where even if the rate of interest are going up, your mortgage amount stays the same. But because the rate of interest has gone so high that some of the people, they are having a problem that none of their money is going into the principal. And now they have to pay a little bit extra money from their pockets to make sure it covers the interest part.
Yes, Saman. So most of the nationalized bank, they don't increase the your even if you're on a variable rate, they do not increase your monthly payments, even though the rate has gone up. Only thing what they do is that your interest portion keeps on going higher. Okay, but once you get to a point wherein there is zero principal going towards the mortgage, that's when they give you a call and they give you an option that either you can go fixed mortgage, or what, they can increase a little bit monthly payment so that some of your amount will go towards the principal, or they will ask you to write a lump sum check wherein do you write a maybe 5 grand 10 grand check depending upon the situation, so that that check will take care of the principal and your monthly payment is taking care of the interest. Again, if you ask me, Raman, if any viewer would ask for the advice that what we should do in that situation if banks give me a call right now, again, it could be subjective to every person, but right now what banks are doing, they are trying to to give you a situation wherein they are telling you to go for a fixed rate. Now they will offer you a rate which is around 5% fixed, which is lower than what you are paying right now, maybe 0.25% or 0.3% lower than what you are paying right now on a variable mortgage, so that you got fixed for next 5 years. And in that situation you are locked for next 5 years, and the way they will tell you that it's a good situation for you. As far as personally, if somebody asks me and why personal advice, I will not recommend to go 5-year fixed right in this situation, even though you are paying little higher interest rate. Why? Because once you have gone for that, you are locked for next 5 years. Even if 1 year, 2 year down the line, interest rates start to go down back to around say 3.5%, which I feel it will be in next 2 years, the interest rate would stabilize between 3 to 4%, anything between that number. At that time you will still be paying a higher interest rate for next 5 years. Even if the market recovers and market goes up and you want to sell your house, in that situation you end up paying heavy penalties for breaking the mortgage on the higher interest rate. Okay, so my recommendation would be, in that case, increase your monthly payment. That increase might be anything between $200 to $500 depending on the situation. Pay that extra money rather than lock yourself. Even if you want to lock yourself only for a year or two, not more than 2 years. I would recommend only 1 year, so that even if there's any volatility in the market, you again have the choice after 1 year. So that's what my recommendation would be into that situation if you get a call from a bank.
Yeah, and Sachin, I can see one comment from Deepak Chopra, and Deepak is our team member and very, very energetic and an amazing team member in Alberta. And Deepak is really putting the flag high for SafeMax in Edmonton. So Deepak has a very valid point. Deepak is saying whatever the money they are losing in the interest rate, they are actually saving double the money in the price. He is talking especially about Edmonton market, which up to an extent I agree, but not up to the extent which Deepak you are saying. To my understanding, I know the prices has gone down by I would say at least 200,000 to 300,000 here Ontario, on a $1 million house, the price has gone down by, I would say, 150 to 200,000. Am I right, Sachin?
Yes, basically depending upon the house, the differentiation is anything between 20-25%. So the house price has gone down by 150K to 250K depending upon the house.
Depending upon the house, yeah. But the way the mortgage, the rate of interest has gone, like it was a very steep interest rate hike, like especially like last to last time when when the Bank of Canada, they announced 1%. But the ray of hope, or I would say that there's a light at the end of the tunnel now, and I personally believe we have we have already touched the bottom. Now, to my understanding, I don't see the price is going to go more down from here because the market has already settled down. People has already accepted the fact that this is the rate of interest. Sachin, in a normal market, I would say before pandemic, even if you look at it, like 3 to 4% is a normal rate of interest. Normal rate of interest.
See,
Now,
Raman, I feel that if the rates are lower than 3 to 4%, even that's not a stable market. If rates are more than 4.5%, even that's not a stable market. So even what we have seen in last 2 years into 2020, 2021, that was not a stable market because the interest rates were too low at that time and the money was available technically for free of cost. That's why people kept taking that money.
right. And that is not, personally, I don't believe that's a healthy sign for the market.
Yes, that's right. That's right.
So I think we are going towards a better state where market seems to be going very soon, and it is definitely going to, I would say, if I look at the long-term perspective of the real estate market, this is a very, very good sign. Now,
Oh,
Sachin,
yes.
there's another advice which I want to give to those clients who are having some problem, and they might face some action from their bank or from their lending institution, and they might threaten them to go on power of sale and all this stuff. Guys, at the end of the day, I'm not too sure when you bought the property, but if somebody bought the property in, I would say in last 1 year before March 2022, those people might face some challenges over there because they will not be able to sell their house at the price which they bought it for, and that they might end up losing all the money or some of the money which they have put in the down payment. In that particular case, I would strongly recommend you to go and talk to some realtor who you trust, who you believe on, so that you can consider your option of selling that house by yourself, right? Guys, if you have to take a harsh decision of downsizing even or going on to the rent, it is always better than to give the house to the bank on power of sale, because they will be putting up so much expenses. They will be charging all the hefty amounts of the lawyer fees, of the real estate fees, and then they might not be able to get you the best property value. So it is in your best interest, like worst to worst situation, if you have to sell the house, you need to make sure that you are making those decisions of your own.
Raman, since you have discussed this topic, I want to share one thing over here. Today, only before this session, I was doing a deal, and I can't share the integrities of that deal, but the number at which that deal is happening, even I was surprised because that property was on power of sale. And in a normal situation, if even in today's market, if that property would have been getting sold by a realtor, by the seller himself, it would have been easily getting sold at least 150K more than the price that the banker is selling it, at least. And that money could have helped the original seller towards putting more money into his pocket to pay his debts. In this situation, only the lender is getting the benefit, not the actual seller who had that property. So keep that thing in mind, that even if you get to a situation wherein all the doors are closed and you had to take a harsh decision whether it is downsizing or selling the property and going on rent, do it yourself, because once the property goes out of your hand, you will have unlimited expenses even before the property gets sold. So again, I do understand that sometimes we get into a situation, but if you are into that, do take advice from an experienced realtor or the person whom you trust. It's very, very important.
Yes. So guys, we definitely understand it's not very favorable situation. This is not what we are looking for, but sometimes the harsh realities are the harsh realities. But I'm a firm believer of a strong real estate market in the future. And even if I look at the market today, if you were working with a good realtor, even if you bought house in the month of Jan, Feb, March 2022, or even before that, I technically don't see any problem until unless you paid a ridiculous price for that. You have gone to multiple offer, and you have thrown like 100 $200,000 extra. But Sachin, like one thing which really keeps me optimistic is, especially if I look at the composition, if I look at the demographics and here it is more of dominated by South Asian and Chinese community, right? These two communities have a very big saving habits. They really keep a lot of saving for for a hard time like this. And that is why I don't see too much problem or too much challenges, especially in the GTA market. And same is the case with the Vancouver. But I will be a little bit skeptical about market in Alberta and market in Edmonton and Calgary. But my recent experience with those two markets are there's a lot of investors who have moved from Ontario as well as from the from Vancouver, British Columbia, right?
And good thing about the Calgary and Edmonton market, Raman, is this, that recently, because earlier the Calgary and Edmonton market was totally dependent upon the oil, but in recent year there is a lot of development happening over there in Edmonton, especially Alberta, all over, wherein a lot of IT companies, a lot of Amazon have opening their storage over there. So there is a lot of job opportunities which have been created in that province, which is on top of the oil reserve that we have got over there. So definitely, I see I don't see that much too much hype going into the market, but I see a very positive trend wherein a lot of people from even Ontario and BC, they are moving towards Alberta, right? Because of the lower housing prices. Even today, I was checking a house yesterday over there, wherein 5-bedroom house was available for around $500,000 in Edmonton, which is attracting a lot of people in Ontario who are doing normal jobs over here, that they can do a similar job over there, but they can have much lower cost, much lower prices for the houses, and they can have a better living over there. So definitely that trend is, I see a positive trend on that side.
That's right, Sachin. So, Sachin, I think it's almost like 1 o'clock. So, guys, before we say goodbye, my last piece of advice: if it is not required, if it is not needed, and somehow you can hold your house, please make sure don't try to sell it right now. Let the time come. In next 2 to 3 months, you definitely will be beneficial. But it all depends upon the situation. And guys, to be very frank, right now it is absolutely unpredictable market. Somehow I am a firm believer of the long-term sustainability of the market. If you have to buy and sell, it really doesn't matter, because the way you're going to sell, the way you're going to buy, right? Yes, there also you can be a little bit smart, and you can really balance out in both the situations and take advantage of that. And for that, you just need one simple thing: you just need the right guidance from a right realtor. And you're more than welcome to get in touch with Team SaveMax, where Sachin is there, Lalit is there, and all other team members are there. We definitely will make sure that we take care of you in a very good way. So, guys, thank you very much for joining us for today's session. And once again, my sincere apologies for joining a little bit late. There were so many things which were happening at my end, but I still did not want to miss it. So, Sachin, thank you very much for taking lead today, and Kamal, thank you very much for spending your time. And I'm pretty sure some of these suggestions will definitely help you, or will give you a little bit more strength to overcome this challenge of a little complicated market. All right, guys, so thank you very much, and have a fantastic weekend ahead. Bye bye.
Thank you, guys. Thank you very much.
Thank you, Kamal. Thank you, Sachin.